please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
We have an important conference that's beginning today, IIFL's 3-day India conference. About 180 corporates attending, including the likes of, Godrej as well as Ajay Piramal. An impressive list of guests, actually, including Jim Walker of Asianomics, who is currently speaking. So we have dragged Giri, the head of research, out of the conference to give us a brief heads up. Giri, good morning. Thank you very much for joining us. Well, first up, what is the mood with all the investors you're speaking to? Is there a feeling that this market could see, probably a nifty in 4 figures before it sees meaningful support?
Not exactly. I would actually say that the mood has been reasonably optimistic. In spite of the fact that some might think that the market is a bit overvalued, so surprisingly optimistic. We've had this show up in many things. The number of FIs coming into the conference has jumped by almost 50% Y&Y. It's more than 100. And the inquiries to meet companies is also much more intense than last year. And I spent a lot of time last month meeting investors, FIs particularly, and the mood seems to be that we should have some earnings growth pickup finally this year, and in spite of this year being a pre-election year, we should get away with a very modest correction, if at all anything. The 4 figures might just about be the worst case. The expected case would be something like a modest single-digit nifty appreciation.
Okay, Giri, good morning. I was talking to Nirmal, and really, I mean, you're calling virtually every big company, and a lot of investors also, of course, attending. Do you think this year, Giri, is going to be a tougher year? Last year, we had a lot of money chasing a lot of stocks. This year, we've already seen how things can be slightly different. So, from portfolio point of view, how should the approach be different this year?
See, that's a reasonable thing to ask. We see among the various drivers of the economy, the consumption still being strong. In this quarter's results, we saw that, and even after stripping out the impact of the 2 shocks of last year, we still are quite happy that it was a bit of a revenue and earnings beat. If you take the entire cross-section of companies, if you strip out telecom and PSU banks, we probably saw it. And if you look at the legs that are doing well, consumption is doing well. We look at a cross-section of auto or discretionary or FMCG. As far as private investment is concerned, the picture is a bit mixed. And that normally is considered the big driver of the economy. But I have to say that not all the data points stack up. Some of the good data points are that we saw almost a 50% jump in order inflows in our sample of companies under coverage in the cap goods sector. But if you look generally across, cement companies have reported good volumes, but that's more because of the government spending on roads, etc. CMI new project announcements have not been dramatically good, dramatically inspiring. And it's a pre-election year, you've got to be mindful of the fact that capex normally drips in such a year. So to expect a rapid acceleration seems to be a bit optimistic. We'll probably have to see and wait and see what happens towards the end of the year if elections come, etc. We are projecting a 22% earnings growth for the Nifty. If that doesn't come through and there is a mild derating, we would probably get away with a flat Nifty overall. As far as stock picks is concerned, broadly, our expectation is that, there should be continuity looking across into the next term of the next government. And if the BJP holds the NDA holds its majority and there is continuity in policies, we should see a continuation of the acceleration that we've just seen. So keeping that in mind, our best ideas are all businesses which are resilient, where we can see earnings growth for at least 3 to 4 years, like Kotak Bank, Motherson Sumi. I can go through all the names.
Sure. Okay, sure. We do have some of those names that are flashing for our viewers on the screen as well. You said 22% Nifty earnings is for for next fiscal, right? For FY19?
FY19 over 18.
Okay.
19 over 18.
You spoke about...
So if that proves to be a touch optimistic...
Go ahead.
Go ahead.
Sure. So if that proves to be a touch optimistic, and if we end up seeing only the likelihood of a 15% earnings growth being delivered, then I would say that at the Nifty P level, there could be some mean reversion. By our calculations, it's about 17.5 times FY19, that would place it about 1.8 standard deviations above mean. That could mean revert a little bit.
Okay. You also spoke about some government reforms. Yesterday, the government took a rather bold step to open up the coal mining to the private sector. Of course, it will take a few years, but what is your own reaction to that? And how would you approach not just some of these companies like Coal India, but more importantly, the power space, etc.?
See, all of those companies are doing well. Some of the utility names are in our list of favored stocks. Power Grid, for example, is one of the stocks which is in our top picks. But more broadly on the matter of reforms, I think both our view and the view of investors that I've generally talked to recently, especially the international investors, is that the government could have done more, but they like what has been done so far.
Okay.
And what we hope for now is continuity, whether it's RERA or bankruptcy or bank recapitalization or even the DBT, which replaces the old way of distributing goods. All of those are important steps, and the economy will strengthen in the long run because of these changes. But they might be painful in the very short term.
Okay. Well, you have TN9 also as one of your guests. Is politics a big concern at all? I mean, elections are about 14 months down the line. Is that a concern for your guests?
No, absolutely. In fact, I would actually go to the extent of saying that that would be the biggest swing factor for the markets. There is a very, very low chance of there is a low chance of a hung parliament. That is the scenario the markets won't like. But if the BJP gets a commanding majority, or at least the NDA gets a majority, and we form a stable, strong government, then that would be the scenario in which the markets would take off after a pause. I think before the elections, it's too early to call which way it might look like going now. But I personally think that the government has a lot of tools in its hand. In the recent budget, we saw an increased emphasis in rural thrust. DBT is a very powerful weapon. And broadly, keeping all this in mind, it would be difficult to argue for the opposition knocking the NDA off its majority perch. We would expect that to repeat. If that happens, that will be the biggest swing factor for the market. It might be pulled forward to the end of the year. So if we take about a one-year outlook, the elections might be within that time frame.
Okay. Giri, thanks a lot for joining us. I know you have to run and catch some of those interesting discussions there at the conference. So we hope to hear from you soon